What to do before the recession hits. It's difficult to predict when a recession may occur, but there are steps that individuals and businesses can take to prepare for economic downturns. For individuals, some steps to consider include building up an emergency fund. Having a financial cushion can help you weather financial setbacks, such as job loss or unexpected expenses. Aim to save enough money to cover at least 3 to 6 months' worth of living expenses. Paying down debt. High levels of debt can be a burden during a recession, so it's a good idea to work on paying off credit card balances and other forms of debt. Reviewing your budget. Take a close look at your spending habits and see where you can cut back. This can help you save more money and become more financially resilient. Diversifying your investments. A recession can lead to market volatility, so it's a good idea to diversify your investments to spread risk. This could involve investing in a mix of stocks, bonds, and cash. For businesses, some steps to consider include reducing costs. Look for ways to cut expenses, such as by negotiating lower prices with suppliers or finding more efficient ways to operate. Strengthening relationships with customers. Building strong relationships with customers can help your business weather a recession by increasing loyalty and repeat business. Building up cash reserves. Having a financial cushion can help your business stay afloat during tough economic times. Staying up to date on industry trends. Keeping an eye on industry trends can help you identify potential challenges and opportunities that may arise during a recession. It's worth noting that these are just a few examples of steps that individuals and businesses can take to prepare for a recession. It's always a good idea to seek the advice of a financial professional to develop a customized plan that meets your specific needs. Do we need to withdraw funds from the stock market during a recession? It's generally not a good idea to make investment decisions based on short-term market movements, such as a recession. While it's true that stock markets may experience significant volatility during a recession, it's important to keep in mind that recessions are generally temporary and that stocks have historically performed well over the long term. If you have a long-term investment horizon, e.g. more than 10 years, it may be best to stay invested in the stock market. As long as your portfolio is diversified and aligned with your financial goals and risk tolerance. Selling stocks during a market downturn could result in realized losses that could have been avoided if you had held onto your investments. However, it's always a good idea to review your investment portfolio regularly to ensure that it continues to meet your financial goals and risk tolerance. If you are concerned about the potential impact of a recession on your investments, you may want to consider speaking with a financial professional for personalized advice. Further advice on the recession. Here are a few additional pieces of advice to consider during a recession. Keep a long-term perspective. As mentioned earlier, it's important to keep in mind that recessions are generally temporary, and that stocks have historically performed well over the long term. This can help you avoid making rash decisions based on short-term market movements. Maintain a diversified portfolio. Diversification can help you spread risk and potentially mitigate the impact of a recession on your investments. Consider including a mix of asset classes, such as stocks, bonds, and cash, in your portfolio. Stay the course with your retirement savings. If you are saving for retirement, try to maintain your contribution levels as much as possible. While it may be tempting to reduce contributions during a recession, doing so could have a long-term impact on your financial security. Consider speaking with a financial professional. If you have concerns about how a recession may impact your finances, consider speaking with a financial professional for personalized advice. They can help you develop a plan to weather economic downturns and achieve your financial goals. Be prepared for job loss. A recession can lead to job loss or reduced hours for some individuals. It's a good idea to have an emergency fund in place to help you weather financial setbacks and to consider building up your skills to make yourself more attractive to potential employers. Practice financial responsibility. During a recession, it's more important than ever to be financially responsible. This includes living within your means, paying your bills on time, and avoiding unnecessary debt. Thank you for watching.